Yes, yes, yes. What's going on, family? What's going on, guys? Welcome to today's session. Super excited to be here with every single one of y'all in the Chizzy chat. Family, if you guys can hear my voice, if you guys can hear me loud and clear, go ahead and drop your locations in the chat. Let me know where you guys are tuning in from right now as we speak, because we are live. And it's your boy Abel, and I'm super excited to be here, super blessed to be here with every single one of you guys, so that we can go ahead and see what the markets has done overnight, but also prepare ourselves, guys, for this New York session, which is pretty much about to start. All right, I mean, technically already started, right? But we are about to have uh, the New York Stock Exchange open up in about less than 30 minutes. And that usually does bring a lot of volatility, guys, to the market. So we're definitely going to take a look at that and see ultimately if there's anything that we could take advantage of for the start of today. Let's get it. Let's get it. Let's get it. I see we got ATL in the building. We got Vegas. What's up? Dallas in the building. New York City. I see y'all. And please, please, please excuse my daughter in the background, because she is going to be a little terror today, unfortunately. All right, but let's see what else we got here, guys. I see we got Charleston in the building. We got Charlotte in the building. Bahamas, ATL, San Antonio, Arkansas, Colombo, Sri Lanka, Nigeria, the boot, Jamaica, London, Germany, Baton Rouge, Louisiana in the building as well. Welcome, family, to today's stream. Super excited to be here with every single one of y'all. And let's go ahead and see what we actually looked at last night, family. So if you guys were not on last night's stream, I highly recommend you guys to go ahead and take a look at last night's stream. It was a very, very powerful session, guys, between myself and my partners on this channel inside of this business. So we really went over a lot of stuff last night, guys. It was about a 2.5 hour, 3 hour stream, right? And it was absolutely next level, right? Just the amount of information that was given, right? The amount of value that was given, and even pretty much the trade ideas that was given as well, guys. Almost every single one of them absolutely played out tremendously, right? Absolutely played out tremendously. And I want to just talk about the ideas that I looked at yesterday to give you guys an insight, guys, of what really happened, and then we can go ahead and obviously prepare ourselves for, New York session, right? Today's, and see what we can do moving forward, right? So on last night's stream, family, the only ideas, I mean, I looked at around two of them. I think it was EU and gold that I was really keeping my eyes on, keeping my focus on to see what could happen. And gold itself, it definitely did run up a little bit higher than I really wanted it to, that I was initially expecting. But it's cool. All it really did was come back up to retest its last high all the way up here, before it initially gave us that overall selling pressure that we expected, right? So this could have been either a stop loss or a missed trade, whatever the case may be. But overall, the direction was still the same. It's just the entry point could have definitely been a lot better, right? But Euro USD, guys, is the one that I absolutely took advantage of. And this thing did exactly what we expected it to. Last night we talked about how I wanted to see price come up to this level right here of structure, and then from here, we can go ahead and see this thing ultimately give us that move lower. Because right now, guys, for Euro USD, I wanted to see price come down to around the 0.986 level, and then from there ultimately rebound and then make its way right back on up to the upside. Because as of right now, guys, I do believe that we are in a period of correction, right? Let me say that one more time, because it's very, very important to understand. I believe right now we are in a period of correction, right, where we're going to see a lot of these pairs, that are overall in one major direction, just starting to give us some deeper corrections, right? Because if we look at Euro USD, guys, this thing has just been extremely, extremely bearish, right? I mean, literally for almost 2 years now, right? Just straight bearishness. So anytime we are looking for overall general biases for this thing to go to the upside, that is what is still considered a correction, right? So we are now experiencing, guys, a lot of corrections across the board, for a lot of these currency pairs that we're absolutely taking advantage of. Okay, so that's just the thing. The bigger picture is that I do believe we are in a period of correction. Now, from a more intraday perspective, guys, or more intraday opportunity, this was obviously going to be the good one. We were able to grab that. I actually did end up closing out my trade for around 72 pips, 73 pips or so. So that was a great catch. But now it's all about preparing ourselves for the next move. All right. So what can we expect ultimately next for Euro USD, right? Because now we took advantage of this, right? We caught this move, we caught this drop, but now what can we do? Well, what I'm gonna be looking for, guys, going into New York session, now that the sell is over, is to see how price ends up reacting, guys, around these levels. Around, I'm really interested to see price come to around the 0.986, 0.987 level, right? If we are able to see price come to that 0.986, 0.987, which again, it could happen very soon. I think that that's going to be a great opportunity, guys, for us to start to look for, a chance to go ahead and rebound and go back to the upside. All right, so that's going to be my main objective, guys, for today, going into New York session, especially once the New York Stock Exchange actually does open and a lot of that volatility enters the market. That's pretty much what we could expect, and that's what I'm gonna be looking for. All right, so I'm gonna be very cautious today, uh, very patient as well, and yeah, and that's pretty much what my game plan is. I want to see price come down to here, and then from there we can go ahead and go to lower time frame and start to wait for, evidence that the market is getting ready to shift. Right, so that's the overall blueprint, guys, from last night's trade and going into what I'm expecting today to see what can happen. Overall, we caught a banger, right? We caught an absolute banger, guys, last night. Risked around 2%, and we made, again, I closed at around 70 pips, so I think I ended up closing around 8% gains, right? Which again is absolutely crazy, right? Risking 2% to make 8% overnight, like that's a banger, right? But now let's prepare ourselves, okay? Because now it's again all about preparing ourselves for the next big move. So we'll see what happens, guys, overall throughout this stream. We'll see what the market ends up giving us. If we are able to take advantage of an opportunity, we'll do it. If not, then we'll just stay on the sidelines and wait for that best opportunity. All right, our job as Forex traders, guys, is to not feel like we need to be in a trade every single time we open these markets, right? That's something that a lot of people tend to do, right? They come to the markets, and as soon as they open up TradingView, or as soon as they open up MetaTrader 4, MetaTrader 5, whatever the case may be, they feel like they have to make sure that they're in a trade. You don't have to be in a trade every single day, right? You don't have to be in a trade every single day. Let me say that one more time, right? Because this is very, very important. You do not have to be in a trade every single day, right? You need to be in trades when it makes sense. Okay, and every single day, guys, is not always going to make sense for you to enter the trade because the trade is just not right. It's not at that area that makes sense, right? So again, we're only taking trades if it absolutely makes sense. We're not here to force anything. We're here to wait for the highest probability setups, and then based off those probabilities, then we can go ahead and or based on what price action does around certain key levels, then we can go ahead and take advantage of that for sure. Right, so that's just where we're at, guys. Let me go ahead and see where we catch up with the chat as well. All right, I see we got London in the building. We got Germany, Baton Rouge, Louisiana, Houston, the Bronx in the building. Shout out to all you guys out there in the BX. We got Vermont checking in. What's going on, Kyle? Good to see you. We got Texas, the boot. Abe, UJ murdering right now. Long day aggressively. Floating 80 pips. Let's go, Eric. I love to see it. I love to see it. I love to see it. Right, let's go. Let's go. Let's see. I call EU also. Let's go, Sergio. Right, it was an absolute banger of a trade. Right, it really was. Let's see, the indices as well are in a bear market correction. It was overdue. Yeah, it really is, right? And again, I feel like a lot of these corrections that are occurring, guys, for a lot of these assets, a lot of these currencies, is really just relating to, again, the data, right? The sentiment right now on the overall market as a whole. We're starting to experience, guys, a lot of pressure from outside forces, right, on these central banks. Right, where now we're even getting things like the United Nations, right, which I don't even know if they're even able to do this, right, but the United Nations, guys, is pretty much trying to pressure these central banks to, to start lowering rates again, right, and the reason why they're doing that is because obviously we all understand that, the strength in the dollar that we've been experiencing is really not healthy, guys, for global trade as a whole, right. The fact that the dollar has gained so much strength over or against all these other currencies is making it so much harder for these countries or these companies or these corporations, right, to actually operate now, right? Because for an example, if it took, we're just using basic numbers, right? If let's say, one country wanted to buy a certain commodity from another one, right, or from the U.S. And last year they were able to buy, let's say, cattle, right? They were able to buy 100 cattle for $1 million, right? Or let's say €1 million, right? Last year, €1 million can get you 100 cattle. But now, because of how devalued the euro is against the dollar, right now, in order for you to get that 100 cattle, now it's going to cost you $1 million and 1.2 million, right, or 1.3 million, right, or 1.4 million, right. So it's now costing a lot more, guys, to do global trade simply because of how strong the dollar has gone over the past year or so. So because of that, now we're gonna start to experience a lot of outside pressure, right? Pretty much trying to demand these central banks to change course, right? To go from being hawkish to turn dovish, so that we can actually start to see a lot of these currencies even back out, right? So there's a lot of happening, a lot of things that's happening for sure, guys. That's going to be influence what these markets are doing, and that's why it's important for us to be aware of the news. That's why it's important for us to be up to date with the data, right? When we are aware of the news, when we're aware of the data, then we can try to figure out the sentiment around that, because the sentiment is what's really controlling these markets, right? And when we say sentiment, I know Skaggs, he actually spoke about it last night on the stream as well, talking about the rumors, right? And that is so true, right? Everybody now is trying to position themselves based off what is happening, right, from a sentimental perspective, but more so like what kind of rumors can we play off of based off the data, based off the sentiment. And that's why, in my opinion, I believe we are starting to see a lot of these, currency pairs and a lot of these assets, guys, start to rebound or at least turn around for the time being. Now, if we're talking about in terms of the Federal Reserve, right, which again is the main central bank, just because again it does operate with the largest economy. The U.S. dollar, guys, is the most traded currency in the entire world, right? So they hold a lot of weight, right? So if we're looking at it from just a Federal Reserve perspective, right? If we're looking at it from a Federal Reserve perspective, I mean, they have not changed course just yet, right? So if I'm looking at it from that perspective and I want to figure out what the dollar can do, guys, overall the sentiment still is the same, right? We're starting to see clues, we're starting to get evidence that things might change, but for right now it's still very much the same, right? The Fed is still very much hawkish. Their plans are still to continue to raise rates, right? I mean, they're expecting rates to be at around 3-4% by the end of this year, right? So, hey, come on. Right? And so because of that, because of the expectation of rates to continue to increase, then yeah, for now we should still remain with our bias that we've had this entire year, right? We should still expect, guys, a lot of these currencies, a lot of these assets to react in the same way we've been expecting, because again, sentiment still has not changed. We're starting to get clues that it could, but it still has not done so, right? So we need to stay with what we know until it is finally proven that sentiment has fully shifted. Now, sentiment, in my opinion, guys, really isn't going to truly shift until we start to see either the Fed reverse course and they do a U-turn on rates and they start to lower rates again, which will be kind of drastic, be kind of crazy, right? Or we are starting to experience lower inflation, right? We are starting to see, lower CPI numbers, right? Things like that, guys, can absolutely really shift sentiment in these markets, right? So these are things that we have to be aware of for sure. All right. But that's pretty much just a rundown, guys, to get you guys caught up on what happened last night and just a few things that I've been really paying attention to for sure. All right, so let's see what we got here, guys, in terms of data. So we did actually just get the ADP non-farm employment change get released, right? This actually came out higher than what was actually expected. They were expecting around 200,000. It came out around 208,000. Right now, again, ADP, guys, is more so of a pre-non-farm payroll, right, which again measures the monthly change in employment overall across the board. ADP measures the change in private employment across the board, right? And it's like a prerequisite for what we can expect on Friday, right? But this is pretty interesting. They actually did have an uptick on it, and we'll see. We have to wait to see now how Friday's news release actually does come out as well, right? But overall, this could be somewhat of a clue as to what we can expect for Friday, right? Now let's see what else we got here. Let me check with the chats. The indices as well are in a bear market. Correction was overdue. Yeah, it was. It really was. All right, so we got Boston in the building. Granada, what's up? Trinidad and Tobago, I see y'all. Divergence with GU and EU. Yeah, we'll definitely take a look at that. Let's see, we got Savage Land in the building. All right, shout out to my guy 20 Pip Savage. Can you check oil? OPEC news just dropped. Yeah, for sure. We could definitely take a look at oil as well. And see what we got here. Let's actually go take a look at oil real quick since you brought it up. And see what oil has been up to, right? So, overall, guys, oil has definitely started to rebound, right? And this is actually interesting because I actually read an article the other day about oil. Hold on, let me see. Give me 1 second, guys, right? Let me see. Give me 1 second. All right, because I actually had an article. I read an article about how the supply of oil is absolutely going to decrease, right? Or the amount of oil that's readily available to utilize is actually decreasing by the day, right? I'm trying to see if I can find that article because I don't want to just talk out my wazoo, right? So give me a second and let me see if I can find this article really quickly, because yeah, I think it's really gonna be a pretty dope article for sure. Just give me 1 second, guys. All right, I don't know if I'm gonna find it. I don't know if I'm gonna find it. I don't know. I don't know, right? But overall, guys, what I think oil is going to do, I think oil really is going to start to get a lot of demand, right? Because the supply of oil right now, again, once I get that article, guys, that I read the other day, I will send it in the Telegram. So make sure you guys are a part of the Profit Society Telegram chats and all that good stuff, all right? Because I will actually send that out, right? But I do believe, guys, that there is going to be a lack of supply for oil, right? And the demand of oil it has been going through the roof this entire year, right? And I think that that could continue, right? So there is a chance, guys, in my opinion, right? Obviously, we have been very bearish now lately, right? We have been very bearish, right? But if we go to the bigger time frame here for oil, all we did is we actually ended up coming back into a major level of structure, support, and resistance, right? So there is a good chance, guys, for oil to really rebound off of this area and potentially start making its way higher, right? Now, again, this is going to be more so expecting, a sort of shift in sentiment right now for what oil has been experiencing. But I think it's very possible, right? Especially once I find this article and I could really send it to you guys and really just break it down myself, it will just bring a lot more insight as well, right? But overall, right, I think there is a good chance from a technical perspective, guys, for oil, to actually start to rebound, right? I would love to see, and this is just me, right? I would love to see if oil can make its way up to this 93, 94 level, right? 93, 94 level will be, pretty lit. Right, so that's something we'll keep our eyes on for sure, seeing what the market ends up giving us right there through that perspective. But yeah, we'll see what happens. Let's see, let's see. Sold US 30 last night. Okay. Want to see a dump today. AUD USD seems to be in a range. All right, yeah, we'll definitely take a look at all those stuff, guys. So again, back to oil though. Again, oil is very interesting. We are starting to push up. It looks like we are gaining some type of strength. I think that we still can actually pull back off of these levels though, right? I think we can actually see price pull back down. I would be interested in oil around this 84, 85 level, right? If we're able to see 84, 85 get tested, guys, and I think there's a good chance for us to actually go ahead and rebound and really make a move higher for oil right now. Again, this is just my perspective, right? I could be completely wrong, but just based off of what I'm looking at from data perspective and looking at it from a technical perspective, it does just actually make so much sense, guys, for something like this to actually happen. All right, so that's something to keep your eyes on, guys, for oil. See what actually happens there. See what the market ends up giving us. Again, we'll just be aware of it, pay attention to it. I normally don't trade oil too often. I usually leave that up to a few of my business partners that trade that religiously. But if I were to do it, that's pretty much how I would be looking at it for sure. All right, so let's see. Let's see what else we got here. Can you explain divergence? Right? Yeah. So divergence is a tool, right? It's a tool that's utilized to really measure momentum, measure volume behind a move, right? And very simply put, guys, how we look at divergence is we compare what price is doing and we're comparing it to what an indicator is doing, right? Whether you're using volume, I personally like utilizing the MACD, things like that, right? And yeah, we're able to see that to help us predict momentum of a move, right? So for an example, if we're looking at oil, we can see that oil has clearly been making these higher highs, right? It's been going higher and higher. But if we look at the actual indicator, right, we're starting to see these bullish pushes, they're actually starting to decrease, right? So the volume or the momentum, guys, behind these moves to the upside is starting to slow down, right? And this is what we're talking about with identifying divergence, right? So again, this also is starting to line up with pretty much what I was looking at for oil, seeing this thing eventually reverse and give us this correction. But this just what divergence is, right? It's when price is doing the opposite, is diverging against the actual indicator that's helping us read momentum and things like that. Okay, that is divergence. Let's see. OPEC agreed to cut supply because oil prices drops. They say sharply. Yeah. See, that's what it was, right? It had something to do with that, right? With OPEC agreeing. And again, it's stuff like that, guys. Is stuff, especially if you trade oil. You know, you have to be aware of, right? Because if they're talking about cutting supply, they're doing it because they want to actually make the demand for oil increase again, right? To make the price of oil increase. So that's just aligning with what I believe oil is actually gonna do, right? So, right. But you ate it all. I might have to get you another one, baby. All right. So that's something to keep your eyes on, guys, for oil for sure. See what the market ends up doing. But let's go ahead and see what we got, guys. We do have around 2 minutes before the actual start of New York's, or at least the New York Stock Exchange is actually open. So I actually want to take a look at these indices really quickly to see what they have been doing. 15 seconds left before we actually do end up going live on this. Now, just looking at NAS, guys, overall, I mean, we did end up breaking below a level of structure right here. All right, so very interesting to see what the market is going to do. I think there is a chance, guys, for this thing to actually start correcting. I would love to see NAS make its way back down to around these levels, right? This 11,200, right? 11,200. That would be pretty juicy. All right. So if we were looking for something like that, if I think that we could see, and again, I'm only going to take it if it makes sense, right? I think there's a good chance for us to make our way down there. You know, we are breaking structure to the left, right? We are seeing lower lows, lower highs, lower lows being created, right? So if we are able to see maybe spike back up into this level of structure up here, guys, then that could give us an opportunity to actually go ahead and ride this thing lower, right? It could. Now, if the market just actually, again, we are coming down around 20 seconds, right? But if this thing instead actually ends up running this high, then that's fine, right? We'll accept the loss if it happens. But then that's also telling us, guys, what the momentum could really be, right? So I'm very interested to see how the market reacts around this key level here. So we're going to keep our eyes on this one as well. And we'll be able to take advantage of it, guys, if we are able to get a position overall, right? But we'll see how, we'll see what happens. It actually did just, market just open. So we'll see how this market actually ends up reacting for sure. All right, but what I want to do, guys, I actually want to go ahead and pass it off to the young legend, Young Lion, if he's ready. Just because I hear my daughter over here in the background absolutely going crazy, right? So I'm still gonna be on the call, guys, with y'all, watching these markets, seeing what we can get. But I want to actually go ahead and let my boy Kyle come on and give us his perspective of the market and give us his insight as to what he's looking for, right? I think he actually just looked at a USD CAD position that I'm interested in seeing what he has to say about that, right? So, Kyle, are you there, bro? Let's see.
Yo, yo.
All right, yeah, go ahead and share your screen, bro, and do your thing, bro.
Yo, yo. Hope you guys can hear me. Drop a 222 in the chat if you guys can hear me. I'm on the stream. I'm looking at the chat. Appreciate you, Abel, for going ahead and starting this thing off, bringing me up. So, yeah, guys. Just being honest, I am looking at this USD CAD sell. It's a low risk, high reward setup. I'm actually in it myself. Um, ain't really much to it, but we are selling USD CAD off of this level. Hope you guys take this trade. Just being honest, because I'm in it as well. It is looking like it's moving in my direction. So we're only about, I would say now 10 pips up. I mean, it's still good to get in. 8 pips up actually. Still good to get in. My stop loss is 136645. I am running about a 27 pip stop loss. Now it'll be about a 30 pip stop loss. Pretty much the reasoning why I took this trade is because I like to see the DXY continue to the downside. If you guys know simple DXY rules, whenever we're looking for the DXY to sell, we're looking for any pair that starts with USD to continue in that direction. USD pairs will sell whenever the DXY sell, and any pair with USD at the beginning will buy up, right? So I feel like Euro USD can definitely buy off of this hidden demand right here, but I won't be taking it personally because I'd rather wait for this level, maybe tomorrow or something, especially since we have NFP. I'm kind of not really looking to like ape into any trades that are not at my desired levels. So like EU and GU, they didn't really hit these zones that I went over on the call last night. So I'm kind of staying out. But if you'd like to buy EU, you can definitely run something like this. If you're like an EU trader and you'd prefer to have a 20 pip stop loss, by all means, I do like this trade setup right here as well, where we're looking at EU coming to this hidden demand. And I feel like this could be good to go as well. Just looking at price action, the way that it's reacting at our level with the New York Open, I feel like this is a good trade as well. Let's say you have a smaller account or you're gonna risk 0.5% on each trade, then EU is also a good setup to trade. Me personally, again, I'd just be waiting for it to come down to this candle. But if you're somebody that you're a little bit more aggressive and you like to trade EU on a daily and you're somebody that would like to take this setup, by all means, definitely go ahead and jump in this thing because I believe that the dollar will just continue going down. As we can see, USD CAD is just coming back up to our entry. It'll be about an hour or two before we see any profit or stop loss on this trade. So if you are taking this trade, either USD CAD or EU, just set your stop loss. Let's say you're putting a 20 to 30 pip stop loss on each. You should just set your stop loss, set your risk to 1% or 0.5%, and just let it rock. Just let it do its thing. Let it just play out. I will go ahead and play some music on here just so we can get that kind of chill vibe, that early morning vibe. And then we'll just sit here and watch these setups. We'll just sit here and see what really goes on. Also on gold, I will go over gold. We can probably see some buying again right here. That's why I'm kind of not really too antsy to jump into the market because some of these levels do need to be tapped. And majority of the times, this sell level could be something that gets tapped, right, before it goes ahead and reaches up for that buy. So just be aware if you're trading gold that I would be looking for buys from this level right here. But majority of the times it might come up and tap this sell level before we go ahead and see that buy that we're looking for. So EU is reacting nicely. USD CAD is reacting nicely. I'm gonna go ahead and send this link into my Telegram chat. Also sending the markup in there as well. And without further ado, I'm gonna play some cool little music so we can get the vibe right today on this morning session. I'm gonna do what I do, put it all together, ain't nothing better. Now, if you got into USD CAD, you should be in profit. You should definitely be in profit. EU is slightly in profit as well. Let's just see how it reacts. If it rejects off of here, then I don't really know what would be the outcome of this trade. But let's just wait and see. Let's take a look back at the dollar here. I'm kind of looking to see if the dollar can reject from this candle zone right here. If not, then I'll be cutting my losses short because that means that the trades would be coming up to a higher level, maybe something like this. See, all trading is probabilities, guys. We don't know exactly what levels the market is going to bounce off of, but we like to play every level in the direction of our trend until we get stopped out. And if we get stopped out, guys, it's minimal risk. We shouldn't be losing more than 2% of our account. So when the next potential market idea comes out in the direction of our trend, we're able to take it and still have risk on the table that we can risk for the next setup. Also be aware today is Wednesday. On Friday is NFP. So again, I'm in these setups more of a half risk mentality, right? I'm not risking the whole table on it. I'm not risking a bag on it. Even just the break of these lows would give us a 1 to 5. And that's what we're looking for here. We got about 20 minutes left on the close of this 1 hour candle. I'd like to see this 1 hour candle close bearish. If we can get a nice bearish closure on this 1 hour candlestick, then that would be amazing. If not, then I would probably second guess this opportunity and I wouldn't really be as confident in it if price action isn't showing me what I want. Can I go over EU again? Sure. So EU is just a simple supply and demand thing, right? The DXY has been trending up, but we're in a counter trend right now where I am expecting intraday selling. I called this out on the Sunday call where I expected the dollar to retrace down to this 107 level, 108 level. And I'm still confident that we'll reach there. So that's why I'm bearish on the dollar today, because this is simply just a retracement back down until this 107, 108 level. So if we know that any pair with USD at the beginning correlates exactly with the dollar, then we know that USD CAD would be more prone to sell. Any pair that has USD at the end has an inverse correlation. So when the dollar sells, these pairs would buy up. So I'm simply just looking for buying opportunities in correlation with the DXY on EU. So my high probability sell zone would be somewhere down here because it correlates with these 4 hour candlesticks down here. So this is more of a high probable sell. So I would be taking it at this level. I'm personally not taking this EU trade, but at the end of the day, for you guys that do trade EU, I still feel that it would be a good shot to buy around this level, right? I feel like it would be a great shot to still buy around this level. But at the end of the day, I don't want to have too much risk on the table. I just want to solely focus on USD CAD. But if you like, you guys can split your risk between these positions, where you can risk 0.5% on USD CAD and 0.5% on USD, on Euro USD, right? So what that means is, even if you were to lose both setups, you still only lose 1%. So that can be something that you guys can do. You guys can split your risk between Euro USD and USD CAD. But me personally, I'm just going in on USD CAD because I'm more confident in this setup playing out. We had some bearish engulfings on the daily. Continued yesterday. I'm looking just for that continuation today. We're also in a 4 hour candlestick zone. So if we mark the 50% of that candle, we would be getting somewhere right here. Let's get the exact 50%. So this 4-hour candlestick has 3 hours remaining. I like to see it close below the 50%. If the 4-hour candlestick can close below the 50%, I would be highly confident in holding this trade the rest of the day. Now, if it doesn't close below the 50% and it starts to close above, maybe somewhere right here, then I wouldn't be as confident in that setup because simply we would just be continuing to the upside. But just me being honest, I'm still looking for this thing to drop unless something tells me otherwise. Now EU, set entry. It could push down to this preferred entry today, but it's not really something I'm betting on. Now EU is giving a great entry, but again, I'm not going to get impulsive and get in. I'm just going to wait for USD CAD to play out. If you were to take this setup, it would be more of like a 21 pip risk. Looks great. All right, let's take a look back on USD CAD. We are in a bit of profit. If you snag that entry, shout out to you. We are in some profit. Let's let it ride. Now EU is starting to move in our direction as well. I'm gonna be honest, I did take a little small position, like a 0.5%, nearing towards 0.25% risk. So you know, GU is still not clear, but this could be something that it plays off of, as long as this doesn't break. Well, let's see how it plays out. In order for these setups to remain valid, the next 1 hour candlestick would have to close above here. So if you're in these setups, don't really hold on to them if they don't give you the reaction that you want, right? You know, you don't want to hold on to losers and marry a bias, right? You know, the bias that I have today, it can change, right? The bias that I have over the next couple of weeks could change, right? Just look at the dollar. We've been bullish on it for such a long time that now it's finally time for us to be bearish on it. So biases can definitely change. Just monitor the reaction. If the next 1 hour candlestick comes out and doesn't close as a bullish candlestick, and at least come near this zone right here, then I wouldn't be interested in holding this trade. And I would come out with somewhat of like a 5-pip loss. Same with USD CAD. If the next candlestick doesn't come out as a bearish candlestick and at least close that way, somewhere near here, then that wouldn't be my desired reaction, and I would actually be looking to get out in profit. So let's just see what happens. We do gotta also be aware that there's a zone up here that we can probably play. So maybe we can get more of a deeper retracement, right? That's one thing that you guys have to be aware of, is that deeper retracements do happen. Sometimes the market will make a deep retracement, but the setup would still be valid. So USD CADs would still be valid even if this trade doesn't hit. I'll just be looking to take it maybe somewhere up here with this candle. Same thing with this. If this doesn't play out, I'll be looking to take something like this, or maybe something like this, and it's imbalanced. So just know, guys, the trend that we have is in our favor, but it's just all about playing the candlestick probabilities until we get that desired entry. So just be aware, guys. Let's just monitor reactions and see what we get. But let's say this doesn't play, then just keep an eye out on these zones. This one right here, and this one right here. Somebody said the indices, right? Let me check it out. If I did trade the indices, I'll probably be looking for buying right here and selling right here. This is just US 30 speaking. And I always like to have 2 zones on every chart, because the market can react off of any zone, and it's just up to the market for itself to really just answer the question of which zone is more powerful to take us in that desired direction. So this would be my buying level, this would be my selling level. Whichever gets hit first, we'll see. Maybe this one will get hit first. who knows? But if you trade the indices, I like these two zones right here. This one to sell off of, I would definitely like selling to come off of this level and buying to come off of this level. NAS 100 is the more popular one as well. It's already started selling off. So that can give you a clue that US 30 is probably going to come up to here and sell off as well. So if I were you and you trade US 30 and NAS and you might have missed NAS or something, I'm giving you guys another setup once again on US 30. This is a very small stop loss, very low risk, high reward setup. Your stop loss would be about 41 points, right? I mean, that's a great setup right there. 41 points to potentially hit for 516 points. That's a 1 to 12 risk to reward ratio. So I'll also be keeping an eye on US 30. Right, especially after seeing this right here, I would also keep an eye on US 30. Who trades US 30 in this call? Everybody drop a 222. PMI is in 2 minutes. Yeah, you're right. It actually comes out at 10, so in 4 minutes. USD CAD, we're still in profit. EU, we're in a little bit of profit. So let's see how these trades run us. But let's go back to that US 30. Okay, so I see a lot of you guys trade US 30. So if you guys trade US 30, you can place a sell limit right here. Put a sell limit at yeah, this is good. Put a sell limit at 30157. Place your stop like, I'm gonna do 50 points. Place your stop at 30207. So this would be a nice trade on US 30 to take it down for a 1 to 10. If you'd like a 1 to 10 on US 30, just place a sell limit right here at the 30157 level right here. I would probably sell right here. At this level, run your stop something like this, right above this candle. That's literally a 50-point stop. So why not put a sell limit here and see what's up? And then if we do catch that move, it's gonna be a 1 to 10. So hope you guys catch this setup right here. Your USD in profit. USD CAD came back up to break even. We'll just continue to monitor price. Yeah, I mean, at the end of the day, I'm giving multiple trade ideas. So, regardless of if one gets clapped, at least another one will be able to make up for it, plus give us profit for the day. So at the end of the day, US 30 could probably not even go to entry, guys. Like, this is just all probabilities. Like, we're not going to be all in on one setup or super confident on one and forget about the other pairs. The thing is, the game is all about risk to reward. So at the end of the day, US 30 could completely just fly through the roof right now, and I could be wrong. So we never know what's going on. For this sell limit order on US 30, I have a buy entry and profit right now. Well, that's great. If you have a buy entry and profit, just put your stop loss to break even. If you're in this right here, just put your stop loss to break even and wait it out. Right? That's a simple fix. Well, US 30 is just dropping off of it's kind of annoying. Didn't really come to that entry that we wanted, but it's just dropping. So that's unfortunate. It actually ended up playing this. Hold on. What is that rectangle? Damn. Well, at the end of the day, guys, it can still come up and tap that sell limit. Don't get it twisted. But it's just looking like it might just fall from here. The DXY actually came up to a higher zone. So really, just being honest, the DXY probably might not sell today. It can sell off of this, but it's 10 o'clock, so we have 1 hour for it to make its moves. And I believe that the moves for today was just a retracement. Yeah. So let's just be aware of that. USD CAD did get stopped out, unfortunately. But that was quick. But this is actually a good loss. Sometimes I mention on my streams that we can take good losses. What that means is, even though we might have lost on this trade right here, this actually gives me a clearer view of the market. Because if the market is just trending, continuing forever, which it was looking like it was doing right here, if the market just continues to continue forever, then what that does is it kind of just gives us no entry opportunity for a low risk, high reward. So just me being honest, since we did kind of break out of this level right here, then I would be looking for my sell right here that I would put a nice lot on there, and it would actually give us a bigger swing target, right? You see, if we would have caught the sell from right here, we would have only caught about 130 pips or so, which is still great. But if we go up to somewhere like right up here and we wait for the entry up here, or you could have took that entry with me and gotten stopped out and said, hey, all right, now that I got stopped out, I know that the market is reaching for this. So now that the market is reaching for that, we take the entry up there probably on Friday, then we're actually catching 250 pips on this setup right here. So the next sell level I do have in mind is 13750. I'll be running that with somewhat of a 30 pip risk for a 240 pip gain. 240, 250 pip gain. And this is the type of entry that you can hold even past these lows, right? So definitely keep an eye out on that. EU didn't really play out as well. But you know what's crazy? It does look like it can still buy up. But I'm just not going to mess with it. I'm going to wait until we get a lower level somewhere like this imbalance. Other than that, these would all be continuation blocks. And we want to get the real institutional order block. We want to get the real breaker bounce level. And I'm going to talk about something called breaker bounce. Right? So breaker bounce, really what that means is we want to find a level in the market. And USD CAD, this is a perfect breaker bounce level, right? Where the market would literally have to sell right here, right? This is what's called a breaker bounce level. It's the last point in the market that the market needs to bounce off of, or else if it breaks, it would break trend, right? So since we did break like the 1 hour structure here, and we are technically bearish for now, this would be considered a breaker bounce level. And I want you guys to screenshot this chart because I will be taking this trade too. I will wait for it to come up to here to start taking this. So especially if you took that sell preemptively with me, I'll be looking to make my money back times 10 off of this trade. So just me being honest, pretty much what a breaker bounce level is simply what it is. It either bounces off of this level and we continue in that bearish sentiment, which I do believe it will, because breaker bounce levels have really high, they have really high probabilities of bouncing, right? Now this breaker bounce level pretty much means that this is the deepest level that USD CAD could retrace, right? It can't really come up to here because we've already mitigated that from here. It can't really come up to here because we've already mitigated that as well. So this is literally the last line of defense. USD CAD will either bounce off of this level, and if it does, then we can see continued downside to even break out of these lows. But if it breaks, then pretty much we have a break of trend. And this is also good too, because if we bounce, then we get the profit and we could write it down for 250 pips. But if it breaks and breaches this candle right here, then the sells are no longer valid. And I would just look to take buys in the same region, right? I would just look to take buys and start taking it in the opposite direction. It's a level, right? Name that level in the chat where you can take the same level but use it for an opposite setup, right? Who knows the name of that level, right? If you can name the name of those type of levels and what are they called, then I'll definitely give you a shout out here in this call. When the level that's a sell level can turn into a buy level in the opposite direction, but it's the same level. Flip zone. Shout out 20 Pip Savage. He got it. He was the first to get it right. Right. Shout out to you, 20 Pip Savage. You're always on these streams, always taking knowledge, always learning something. So in this breaker bounce level, I'll be looking to take a sell. But even if it breaks, I'll just be looking to take a flip zone. And you could do the same thing right here. Could use this as a flip zone if it were to come back and retest, right? Flip zones work in every area of the market. But this is the only trade that really has my risk to reward that I desire on it. So that's why I would just be preferring this sell. Now, what's funny is Euro USD ended up just coming shy of that candle and reacting up. So again, this is a reason why I kind of stay out, because once I take about 1 to 2% loss per day, like I'm pretty much done. And it actually kind of gives me a better outlook as to what's happening next in the market, because now I know that this sell is the more probable sell that we'll be getting later on into the week. And Euro USD would probably come down to my lower levels. Now gold ended up dropping as predicted. It actually ended up just not even coming up to that level, and just ended up going straight down. GJ, not really much here. Maybe a buy. Who knows? I'm gonna check back on the indices. Yep. So indices just completely just fell without even coming up to this 1 hour candle. But if you were looking at something on the 15-minute, this would have been valid. I think we're gonna keep dropping. We are gonna keep dropping on the indices. So if you like to catch something on the 1 minute, be my guest. I won't be today, but I would like to see this selling continue. Maybe even to somewhere down here. Then we can start buying this thing back up. EA on the way. I want you to explain what that means, bro. EA is kind of a little bearish to me, so honestly, this is a good sell level, but I'm not gonna overtrade today. Sometimes you just have to know that another setup will come on your pairs. I don't even trade EA, but yeah, this looks like a sell. Gold ended up dropping. USD CAD ended up giving that deeper retracement. Euro USD hoping we can get that deeper retracement. GU is going to get that deeper retracement down to this. This is also a trade I'll definitely be looking at taking. GU and USD CAD are the most cleanest this week. Just being honest, EU isn't really as clean, right? It can play this or it can play this. There's like two zones. With GU, it's kind of clear, right? It's kind of clear that this candle is the next candle to buy up. Right? This is like a clear setup. Sometimes you only have to take the clear setups. And guess what? That's a 1 to 12 just reaching for the highs. But reaching up to that desired sell level is a 1 to 18. So that's why, hey, we catch this setup right here, we completely cash out for the week. And we don't have to worry about anything else. Now EU, it's kind of a little different, right? We would have to take this trade. Yes, we'll catch a 1 to 7, 1 to 8, but we'll also be tempted to take another setup. So that's why I'd be more interested in GU and USD CAD, because these are big risk to reward. This is like a 1 to 9, and this is really a 1 to 12, 1 to 13. So that would be 20% on 2 trades already, and we would literally just call it a month, to be honest. This off of 2 trades. I can literally call it a month in your trading. You know, let's talk about like monthly goals and weekly goals. Let's say you're looking for like 200% on your account within a specific year. You need to break down monthly and weekly goals, right? How much percent do you want on your account over the course of a year, right? Over the course of a year, let's say you're on a funded account and you're looking for, let's say 5K a month, right? 5K a month, and you have an 100K account. Simply, you need to set pretty much a monthly and a yearly goal. So 5K a month is 56% a year. You need to make 56% within a given year. Now per month, you would just need to make 5% a month. Now per week, you would simply just need to make 1 to 2% per week. Now let's say you're looking to make 10K a month. You would need 100% in a year, 10% a month, and I would say 2 to 5% per week. So once you hit 5% profit within a given week, you should be done for the week. Let's say you have 2 back-to-back weeks of making 5%. That means you made 10% within 2 weeks. So you should be done for the month, right? Once you hit your goal for the week, you should be done for the week, right? So once I hit my 5% on 1 week, I would be done for the week. Let's say I hit 5% 2 times in a row, 2 weeks consecutively. I already made 10% within 2 weeks out of the month. The last 2 weeks of the month, I don't even need to touch the chart. I don't even need to click the button at all. Right? A lot of you guys hit your monthly and your weekly goals, but you just keep trading. Like you keep going, you keep trying to make it more. The greed tries to get you to get that 100% within a month, which will never happen, and you end up losing all the hard-earned profit that you gained, and sometimes even going into negative, right? So once you hit that 10%, even if it's within 2 weeks, you should be done for the month. 2 weeks off of the month, you're done, right? Aim to hit your monthly goal every single month. So when you look back at the end of the year, Christmas time, you'll be like, damn, 100% was done within the year. And guess what? I made 10K a month by just going for my weekly goals and stopping, by just going for my monthly goals and stopping, right? It's just as simple as setting goals. If you don't have a goal, you don't have a destination for where you're going. You're going to end up nowhere. Do we need to look for a BOS in the 15 to 30 minute confirmation USD CAD sell entry? To be honest, you could, but I really wouldn't be looking for that because this is a breaker bounce level, right? I understand the risk. If you're more of a conservative trader and you like to wait for things like that, see, I don't wait for things like that. I just enter and I wait to see if it does print that. And if it doesn't print that, then I'll cut with a small loss, or I'll just let it hit my stop loss, because I always understand how much I'm risking before I even get into a setup. So I'm literally painting out a scenario that I'm going to lose before I get into a trade. So when I do lose, like, I don't even care because I kind of already thought about the scenario of if I would have lost already. So yeah, you could, but just me being honest, this is something that could just reject and not even give those lower time frame breakup structures and could just melt. Because again, this is a breaker bounce level. So if it bounces, then it'll just bounce and go straight and break those lows. But if it breaks, then we're officially bullish again. And that's kind of something that I don't really see happening. But again, I'm kind of just going with that insight that we're at a breaker bounce level.
That's a fact. That's a fact. Yo, Kyle, you can hear me, bro?
Yes, sir.
Let's get it. Let's get it. Let me actually go ahead and answer a few of these questions that are in the chat as well. Yo, you was going crazy too, family. Family, can we go ahead and just drop some sevens in the chat for the boy Kyle? He's really, for one, brought me a lot of peace of mind with this damn music in the background. So relaxing. All right, but overall, I do want to just go ahead and break down pretty much my thoughts, guys, on why the dollar has decided to gain some strength. And it probably has to do, guys, with this PMI data, this PMI information that we actually just noticed. Actually, yeah, let me go ahead and share my screen. All right, because we actually did just get, guys, a lot of data that is very interesting, right? In terms of PMI, right? That can obviously be a big reason why the market is shifting overall. Because this PMI data itself, guys, what it really is doing right now is it's showing that we are still seeing, strong services across the board over here in the U.S. And because of that, that is pretty much just giving us an insight as to what the Fed is probably going to do, right? When we're talking about, data like PMI information, guys, this is like one of the first news releases that we're able to get at the beginning of each month to really give us an insight as to, what's really happening from an economical standpoint, right? And this data came out positive, right? It actually came out higher than actually expected, right? They were expecting it to come out around 56. It came out at around 56.7. So because of that, that is showing that we are still experiencing, guys, some strong sectors that we are. The whole point of us raising rates and doing things like that is to try to see these things slow down. But we're not getting that, right? We're still seeing strong sectors across the board, guys, showing strength, showing that things are still expanding, showing that certain sectors are still growing, and that is not necessarily positive for the state of the markets that we're currently in right now, all right? Because obviously, right now, the main objective for the Fed and for a lot of these, or mainly for the Fed, is to try to get things like inflation under control. Right, but when we're getting data like this one right here, non-manufacturing purchasing managers telling us that the sectors are still growing, still expanding, then that is really not going to help with the fight on inflation as a whole. So because of this data, that is exactly, guys, why we're seeing the dollar just gain strength, right? And it looks like it wants to really start to rebound. Now, we are coming up to a few levels, guys, that I'm going to be very interested in, right? Very, very, very interested in. And I want you guys to be aware of this as well, right? This level that right now, guys, we're pretty much at this 111 level, this 111.75. I think that this could really be a make or break type of level, right? One of these flip zones that like Kyle was talking about, right? Because depending on how we play off of here, guys, can really, really lead to some more movement overall. So if we are able to, hold this level, I think we do still have an opportunity to give us a deeper correction, right? Like right now, my ultimate goal, guys, for the dollar is to see it come all the way down to around this 108 level, right? Like that's been my goal, right? That's the bias that I gave to you guys at the beginning of the week or yesterday. That's pretty much how I've been positioning myself in these markets, is to take advantage of something like this, right? This drop. And it's still very possible. Obviously, we got to wait and see now to see how the market does react around this key level. Because again, that data did absolutely shake things up a little bit. But my still objective, guys, is for us to make our way down here. And then from there to eventually go ahead and rebound and get into that bigger overall bias that we've been expecting overall, right? So very interesting times though. Again, so I really would be looking for some. I mean, it might be a little bit risky just going against the data that just released, going against this type of momentum. But I don't know. I do think that there's still a good chance, guys, for the dollar to actually rebound or at least start to really sell off from this area right here. Right now, obviously, if we do start to get that selling off for the dollar, then we should understand correlations and how to trade that, right? So that's gonna be interesting. Now, if the market itself, guys, or the dollar itself just rebounds and actually just goes ahead and breaks above this level, see, then we're most likely definitely gonna come up all the way back up to around this 112. Maybe even higher up to that 113 level, right? Because we do have a few levels, guys, that we're probably going to end up targeting if we actually do end up really, really seeing a lot of momentum above, this level that we're currently at right now. So we're at a make or break level right now for the dollar. My opinion, yeah, we did have some positive data for the dollar itself, some negative data for the economy as a whole, which is why we're seeing these indices start to drop. Um, I think that it could very well be something that is short lived, just because I think there is still more downside to go here, guys, for the dollar as a whole. All right, again, I truly believe that this week and possibly next week is the period of corrections that we're currently in, which is what I spoke about in the beginning of the session, the period of corrections, and I think that these periods of corrections could definitely hold true. Now, again, obviously, the data did come out, so who knows what's going to really happen, guys, in the next few hours. If the next few hours we just see this thing continue to fly, then so be it. We'll just adjust ourselves and be like, damn, the demand for the dollar just through the roof, and then we'll just go ahead and adjust, right? But for right now, I'm definitely leaning towards seeing this thing possibly react off of here, right? So let's go back to the euro now, right? And you look at the euro USD and see how we can actually position ourselves in a way for this, right? Because again, we are at that same exact level, guys, because again, the dollar pretty much does the exact opposite of the euro. So if we're able to see price, guys, really maintain around these levels over here, right, that we're pretty much testing right now, I think there is a good chance for euro to possibly rebound, right? So what I'm doing here, guys, is again, I'm not going to just force a trade. I'm not going to just jump in because I don't want to go against the data that just came out that's bringing this weakness for the euro. But I'm going to be highlighting this level right here, right? This level right here, right? This is the 0.985 level. The moment that we're able to see price rebound and get back above this 0.985 level, I'm going to be taking that, guys, as the fact that we are going to start to experience euro strength come back into play. All right, so be very careful, or I'm going to be very cautious. I'm going to be very patient. I'm not going to just force anything just because, but I want to make sure that I am taking a high probability trade setup that makes the most sense. So if we're able to see price rebound back above the 0.985, then I think that that could be a great opportunity for us to still go ahead and catch a move higher. At the very least, to come back up and retest these highs over here, guys, for euro, right around that 0.997 level. So just wanted to come on and just really just break down pretty much what has happened and why the dollar itself just gained strength. Again, these are things, guys, that when it comes to data, yeah, you could try to trade the rumors and all that good stuff, right? But when we have major misses on projections or major beat on projections, things like that, that is stuff that we do not have control over, right? We can't dictate stuff like that, right? Because right now, I mean, even the economists were expecting a drop in PMI, right? They were expecting it to actually come out lower. It actually came out higher, right? So, if the economists, if the people that are actually making these big time decisions for these things are also getting it wrong, then there's no way in hell that we can expect ourselves to get it wrong, right? But that's also why it's so important to understand risk management for when we do take trades, for when data like this does come out, which is something that, again, is sort of unexpected, you could say, right? But that's pretty much why the dollar has just gained that strength, guys, is because of this data right here, right? This right here is showing that we still have, strong, strong sectors across the board, non-manufacturing sectors across the board, and because of the current state of the markets, that is not looked at as a good thing right now. Okay, so that's pretty much just a rebound on that for sure, guys. I hope that makes sense. That makes sense. Drop some sevens in the chat, right? Drop some sevens in the chat, guys, if that made sense. Because just really wanted to break that stuff down. Because again, I know some of you guys are probably like, "Yo, what happened?" Well, that's what happened, right? We had data come out, we had news come out, right? And news absolutely is going to shake these markets every single time because that's just the way that these markets are, right? A lot of big time smart money right now, guys, is absolutely taking advantage of the rumors, but they're also paying very, very close attention to what the actual facts come out as. All right, so that's definitely very interesting to see. So I'm gonna be keeping my eyes on this euro. Again, I'm gonna be patient. I'm gonna be patient. I'm gonna be patient. I'm gonna see what the market does end up giving us. If we can get a nice opportunity, maybe a rebound back above the 0.985, then we can take advantage of that for sure. But let's go ahead and take a look at NAS, right? Because again, remember early at the beginning of this session, guys, at the start of this session, I told you guys for these indices that I was expecting them to actually roll over, right? I was expecting them to continue, right? And that's exactly what they're doing, right? And I actually mentioned to you guys as well that I wanted to see this thing rebound back up before we continue. Now, we actually did get that little rebound on the initial market open, right, at 9:30. It didn't reach to exactly where I wanted it to reach to, but it did come very close, and now we are starting to see this thing roll over. So, I mean, the indices overall, guys, is definitely doing exactly what we expected it to. But just keep in mind, again, this could be something right now that could be short-lived. The selling pressure right now. So I'm going to be keeping my eyes on, guys, for this level around here. I really am interested in, I mean, we're getting very close to it, right? But around this 11,300 level. If we can come down to this 11,300, guys, for NAS, there could be an opportunity to find a reversal of this move, right? So down here, I'm gonna be patient. If we can look for some type of a break of structure, some type of a change of character, something like that, then that could be an opportunity to go ahead and get involved, and then from there we can go ahead and ride it out, possibly back up to these highs or so, right? So that's just my outlook for these indices. We'll obviously see what the market does end up doing, but yeah, that's pretty much where we're at for that overall, right? So just wanted to come out here and just really just break that down for y'all, so you guys are all aware and have an understanding of how I'm looking at the markets right now. I think there was a question, right? Shout out to Eric, man. Eric always comes with a lot of great questions for sure. All right, he said two of the largest banks on Europe under liquidity crisis. They are reshuffling their department, moving all risk to a subsidiary. Let me hear your thoughts. Yeah, I mean, there's a lot happening right now, guys. Right, and the main thing has to do with the bank. What is it? The bank of the Swiss Credit Bank or something like that. where right now they are definitely at, there's a very big possibility of them actually literally defaulting on a lot of their debt and a lot of their things because of a lack of liquidity, right? But that also does come back into play, guys, with what I was telling you guys about, everything that's been happening for these central banks and the dollar and things like that. Where a lot of these central banks are not going to have enough money to even pay on U.S. government or U.S. debt now, right? Because it's literally costing them more to do these things. So 100%, right? There's a lot of things happening right now, especially overseas with a lot of these major banks, major institutions. They're actually comparing, guys, this whole situation with the credit, the Swiss credit bank, something to like what happened in 2008 with the Lehman Brothers, right? Where the Lehman Brothers was a massive institution, right, that ended up actually closing down, right? Like they actually literally went out of business because of the whole situation in 2008, where they just weren't prepared for it, right? And they're actually comparing that same situation with, this new bank over there in the UK or over there overseas with the, Bank of Swiss or whatever it is, right? So there is a lot happening, and there is a lack of liquidity across the board for a lot of these institutions overseas because of everything that we have been seeing, right? Because the dollar gaining massive strength, right? Because government bonds over here in the US has been in such demand, right? Where everybody's really just going towards the US to look for safe haven assets, right? And that's why I was telling you guys yesterday and earlier that this is eventually going to have to shift, right? This sentiment that we're currently seeing right now, where everybody is just rushing to the dollar, everybody's just rushing into government bonds, this is eventually going to have to shift because things like this are going to occur, right? Where a lot of these big institutions, guys, are now going to start to go through a liquidity crisis, and they're probably ended up, I mean, it's either they're going to get bailed out, which is probably going to be the best thing that can happen, or they can be just like the Lehman Brothers and end up freaking closing their doors completely, right? And that's going to cause another big crisis, right? So we're at very interesting times right now, family. And that's why, again, for me, I'm very cautious on how I'm entering positions now because I'm very big on fundamentals and sentiment. You guys know that. But right now, we're seeing mixed sentiment across the board, right? Like literally across the board, right? We're seeing mixed sentiment, whether it's because of these institutions now with the liquidity crisis, or whether it's because of outside pressure that a lot of these central banks are now starting to experience. It's crazy, right? The situation that we're in. That's why for me, I'm really not going to be riding out long-term position trades right now, right? I'm literally going to be sticking to intraday opportunities because you never know what can happen tomorrow, right? That's why I'm getting in today, I'm getting out by the end of today, right? And then come tomorrow, you never know. There could be new data that comes out that completely shifts the whole landscape of the market, right? So I'm very aware of that. And that's why I'm taking smaller position trades, right? I'm not talking about in terms of lot size, but I'm talking about in terms of targets, right? I'm not riding out trades as long as I normally would because we are experiencing mixed sentiment across the board, right? And not just from here in the US, but globally, we're experiencing a lot of mixed sentiment that is making it a little bit harder to really predict what can actually happen in these markets. Okay, so I hope that made sense, family. Drop some threes in the chat if that making sense because we are in very, very interesting times, very drastic times that, yeah, it's definitely a little bit harder to read right now, these markets for sure. All right, let's see what we got here. Nas is to 10,200 or 10,800, very possible. Let's see. They will most likely get bailed out. I mean, yeah, it's a situation where they probably will end up getting bailed out, right? But again, understand this: if we do get back into that cycle, guys, of bailing out these institutions, is that going to help fight inflation? Like, answer that question, yes or no? Right? If we start to see central banks, guys, start to bail out these big institutions, right, because of a liquidity crisis, is that going to help combat the main objective that these central banks have been focused on, fighting inflation? No, right? Of course not, right? Because in order for them to bail out these corporations, they're going to have to turn the printer back on, right? They're going to have to go from tightening, right, quantitative tightening, back over into quantitative easing, right? And then again, that's going to pretty much just put them back 10 steps from what they were just attempting to do, right? So again, it's very, very interesting times right now, guys, right? And that's why I'm saying we got to be very cautious of this stuff because these markets are going to be a lot harder to identify, a lot harder to read, just because we are experiencing a lot of mixed signals across the board. And I mean, if we're being honest, guys, these central banks have a very, very tough job right now. I'm glad as hell that I don't work at a central bank, right? Because it's like a lose-lose situation for them, right? If they try to, lower rates again to try to, ease up, then guess what's going to happen? Inflation going to continue to go through the roof, right? But if they continue to try to fight inflation, see, then we're going to have these situations where we could experience liquidity crises, right? We could start to see a lot of crazy, drastic things, right? So again, it's really like it's not an easy job to have, especially with the current landscapes of the markets. And it's also not easy for us to even really predict what can happen. That's why it's even more important now, guys, to practice proper risk management. Just because, again, you really don't know, right? These markets are, again, experiencing a lot of crazy sentiment, a lot of crazy shifts. And these are things that we just have to be aware of for sure. All right, so that's just a little insight, guys, into that. I'm glad that you guys are understanding it. And I'm glad that it's making sense for sure overall. Right, so let's see. Is it me or Wednesdays are reversals day, right? I mean, that's something that's been talked about a while, right? There is possibilities for the markets to do some type of reverses in the middle of the week, right? Wednesdays. But I've also seen it too where there isn't no reversal, right? But I've experienced both of it, right? Where we do have a lot of reversals in the middle of the week, but then there's also times where it just doesn't reverse at all. Let's see. I've heard the concept of midweek reversal, yeah, and yes, it's just another little concept that a lot of people utilize, you know. But let's see what else we got here. Kyle, do you have anything else you wanted to talk about, bro? Because you were absolutely going in. You were on fire. I'm not sure if you're even still there. Just want to make sure that if you got all your points across before we get off.
No, honestly, bro, I'm done for the day. I'm pretty much just looking at the same thing as you, bro, waiting for the dollar to start slowing down and give us that more bearish pressure.
All right, cool, cool, cool. Well, all right, family. So besides that, we do appreciate you guys jumping on. As usual, we will be doing this consistently, guys, on this specific channel. So if you guys are not subscribed just yet, make sure to be subscribed so that you guys do get updated. And make sure to turn on the notification bell, family. Every single one of y'all, be part of the Noti gang. Turn on the notification bell so you do get updated when we do decide to drop videos, when we decide to go live. Because we are going to go in on this channel. We are going to provide you guys with massive value. And all the content that we're providing here, guys, is going to be better than everybody else's paid content. All right, point blank, period. Right, that's been my thing for the longest, and I really want to position ourselves in a way that we are providing so much value that you guys don't need to go nowhere else, right? So we appreciate y'all. We love y'all. All right, Kyle, I appreciate you, my brother, for holding it down for sure. You definitely came in, dropped a lot of value, a lot of mindset, a lot of trade management. I think that's the one thing that I want you guys to pick up from what Kyle was doing, right? Trade management, because that is a big thing that a lot of people sleep on, right? It's trade management and understanding how to manage a trade at live, right? Like as the trade is going, right? So definitely take notes of that. Please rewatch this if you guys did not catch that, and we'll go from there, family. But other than that, I will be back live again tonight, Asian session stream, 10 p.m. Eastern, right, on this channel. So make sure to show up. Let's go ahead and really just get back into it and get prepared, guys, for going into tomorrow, right? So family, I appreciate y'all. I love y'all. Thank you guys for rocking with us, and I will see you guys all later on tonight. Let's